see me. If you can let us know in the chat box, that would be great. If you're joining us on the live stream, welcome as well. If you just let us know that you can see and hear me, that's a good start for us here on our Wednesday afternoon webinar. We'll look to begin just in a couple of moments. I appreciate there's always a few people late to the party coming in, and then we'll crack on with our main piece today. Great. Good afternoon, everybody. Welcome to the next in the Admiral Markets Trading Spotlight Hot Topics webinar. My name's Paul. I'll introduce myself a little bit more formally later on, but I just wanted to welcome you all to joining us for today's session, talking about in specific kind of online shopping stocks. Great for you if you're joining us here live, or if you're joining us here live in Zoom, or whether you're just joining us through the live stream through YouTube or Facebook. Great to have you here. You're very welcome. I appreciate, as always, that we have a really broad range of people joining us for our sessions, from complete beginners to very experienced traders. You're all very, very welcome. It'd be great to know what if any experience you have yourselves of either following kind of online retailers, okay, or following just retail and trading retail stocks and the actual overall sector. If you have, great, put that in the chat box. If you're watching this later on our YouTube channel on demand later, and you've got questions or comments or thoughts, please give us a like there on the YouTube channel, and also just drop in questions or comments. We always get back to you, always keen to answer, and always keen to help and help guide you on your own trading journey. So if you'll just bear with us a moment, what we'll do is we'll bring up our slides for the session for today, and we will move on there. So I'm hoping that here we go. Just hopefully that you can still all hear my voice. You can see me. You can actually see the slides. That's always a great stock. And as I say, we're going to talk about today online shopping stocks. Are they still viable plays? And we're going to really look at what, if any, opportunities still remain within the sector, and how you could engage with them through Admiral Markets. As I said, Admiral Markets, they are a global broker with local support, and they are licensed and regulated across a wide range of regulatory environments. They provide competitive spreads on the most popular of trading products, and you can engage with markets using both the MT4 and MT5 platform, and also the Admiral Markets Supreme Edition. If you have any particular questions there about Admiral Markets, please get in touch with your account representative, and they'll be very happy to help guide you. So what we're going to talk about today, well, as I said, we're going to talk about online shopping stocks. But really, there's a little bit, of course, of the history, which I'm sure a lot of you will be already well aware of it, because you're living it here as we speak today, about how the COVID pandemic affected the retail sector in general. We'll talk a little bit about, what retail companies thrived during the pandemic, and we'll touch on a little bit about, how you can trade and invest in this sector if it is of interest to you. And maybe we'll look at one or two of, where are the opportunities now? What are the things that are worth adding to your watch list that could actually help you in your own engagement with this particular topic? As I said, if you've already got some experience of either trading the retail sector or you're particularly trading online stocks, well then, please, by all means, it'd be great to hear what your own particular experience has been, and also to sort of, to see, what you believe will happen for, the remainder of 2021. It's always fascinating to hear other traders and investors their own particular ideas and thoughts on sectors or stocks or particular instruments. As I appreciate that sort of all adds to the color of the landscape that we're looking at when we're looking at this particular subject. So for those of you who don't know me, I said my name's Paul. I've traded for many years. Okay, I've traded through for funds and for individuals. Primarily, I look to trade FX indices and commodities. They would be my major focus, and I'm primarily a trend trader for sort of longer term trading and a reversal trader for sort of shorter intraday trading. So, online shopping stocks, ladies and gentlemen, all right, are they still a viable play for us? As you're undoubtedly well aware, the kind of COVID crash back in February, March 2020, a year ago already, has brought about a shift in the way we operate on a day-to-day basis. You already know that, okay? You're already kind of living that undoubtedly. And as I say, I always appreciate that we get such a wide range of people joining us for these sessions from all over the world, and clearly myself and Admiral Markets, we hope that you're all safe and well wherever you may find yourself. But invariably, it has undoubtedly touched everybody in the world at the moment, okay? And it made shift in the way that we live and we operate, we work on a kind of day-to-day basis. The thing is, for many of what would have been termed as the old bricks and mortars retailers, it was the final straw. Okay, I can talk about here for certainly my experience here in the UK and also in Ireland, where invariably, we pretty much went into a straight lockdown, and that effectively closed pretty much all the retails other than those that actually sort of selling food, okay, sort of supermarkets that were able to sell food. And even within those supermarkets, some of those supermarkets were very narrow in terms of what you were able to buy from them, as in it was literally food. There was nothing else of that they might have wanted to sell to you that you were allowed to do so. So that kind of lockdown, as I said, for many old bricks and mortar retailers, it was the final straw. However, okay, it also offered an opportunity for many other established retailers and also newer, okay, online offerings. And today what we're going to do is we're going to take a little look at the kind of the winners and losers of that and discuss whether there are still opportunities out there, okay? Does the sector still have, does the sector still, is it still warrant our interest and attention? Is there something that we really need to want to be able to sort of take a bit of a look at to work with? So, what's the story really? Where does this come from? What's the background that's leading us to where we are today? Well, many of you will know that for many years that retailers were of that bricks and mortars variety, and I appreciate we kind of sling around that kind of that term phrasing bricks and mortar, but I appreciate for many people they may not have fully understood it, and really all that's talking about is retailers, shops, etc., that had effectively a physical presence built out of bricks and mortar, and it was that kind of physical shopping experience that customers engaged in and still do and will undoubtedly still do once lockdowns are lifted throughout the world. Customers, clients, people still want that kind of social experience of being able to go to a shop, to have a little bit of a browse around and look and actually choose what they want and engage in that experience. And for lots of people, that's actually a very pleasurable experience. It's actually for some people I know, okay, for some of my ex-girlfriends, that was their favorite hobby. So that is not going to change. That's the way the world will be. That is the way that people will still want to engage. However, over the last 15, 20 years, okay, the advent of the internet, all right, has accelerated a move towards online shopping, all right, kind of click and buy, click and collect, call it however you wish to particularly have your own element of it. There has been a move towards online shopping, and that has only accelerated over the last 15 years. As you might say, as effectively, the internet has become more mature, as effectively the kind of the network infrastructure, okay, in terms of the actual internet communications infrastructure has been able to effectively reach further places, have a deeper level of connectivity, and also the kind of the levels of bandwidth that have been able to sort of to actually to come right to your device. That has accelerated, and as that's grown, that has effectively opened up this what is now a huge sector about particularly retailers that specifically focus on online shopping experiences. And kind of this kind of shift, kind of culminated almost in terms of response to the COVID pandemic. So as all the physical shops closed down, which I'm sure you all saw and experienced, what we saw was a huge amount of online retailers stepping in to try and fill that gap. We also saw, existing retailers try to expand their online offering, and also newcomers to market who are literally just looking to particularly fill a gap. I'm going to talk a little bit about some more examples as we go through that over the next few slides. And it had a massive impact. And I'm just going to use a UK example here, because basically that's where I'm based, it's where I see. But even though I'm going to talk about a UK example, I have undoubtedly know that there were specific, examples relative to your own particular geography. Whether you're joining us today from Honduras, or from Saudi Arabia, or from Malaysia, okay, or from Berlin, I have no doubt that you will have had similar experiences to this. But this is a very UK example, but it shows what actually happened and how the COVID pandemic actually sort of was a real breakwater, okay, or rather the dams were broken in terms of actually what actually happened and how it affected existing retailers and also online shopping retailers. So a very big company in the UK, Primark, a real stalwart of the UK high street, has had a terrific growth prospect over the last 20 odd years. I think they were actually originally an Irish company, and then effectively they are part of a big conglomerate company called ABF, Associated British Foods. But they had taken a decision, that this was their commercial strategy, that they would have no online e-commerce offering. They wanted, they're primarily fashion, transitory fashion, fast fashion, I think it might be called these days. They actually wanted people to go to their stores and spend their money there, and lots of people were very, very happy to go and do that. Not myself, but each to their own. But it was effectively a case of they had no online e-commerce offering. So just under a year ago, March 2020, when we went here in the UK to complete lockdown, Primark went from sales of £65 million a week in sales to zero. All right, literally overnight, their revenues collapsed, disappeared, because they had no online offering there. Can you imagine exactly for a company, what that must have been, especially a huge, big, multi-billion-pound conglomerate. Literally overnight, the taps were turned off, in terms of their sales revenue. And you have to think about all of that, effectively, how that has a huge impact on the company itself, because they would still have been paying, for staff until the furlough schemes were established, but also, most importantly, they would have had stock in their stores that was just sat there, and importantly, they have effectively those bricks and mortars, those huge, big shops. And if you go onto any UK high street, Primark is one of the biggest, if not the biggest, shop on the high street. So you have all of that kind of overheads, all of that to take into consideration as a bricks and mortar retailer, and actually no outlet, to either sell existing stock through an online sales channel. So effectively, the company is still going, and still and they say, as you can see there, they're basically, they think it's forecast they've had $1 billion in sales loss. All right, as that's what they announced just last month. And that's just it's a huge, that's a huge number. And undoubtedly, as the high street comes back, they will come back out of that. But invariably, you can probably understand that is they've been in a terrible state for the last year. The director who basically who had the strategy for no online e-commerce offering, I suspect he's probably brushed up his CV and looking for a new job. But there you go, you don't know what goes on within companies like that. But invariably, it's a good example of actually how the kind of a big, huge company that came to like a juddering halt overnight as part of it. And if we look at the share price of the company here, this is, as I said, they're part of a conglomerate called ABF, Associated British Foods, on the London Stock Exchange. I'm just going to use my drawing tool here to, well, you can see for yourself what was happening during, prices, had been kind of, sort of grinding its way up, but you can see for yourself, we had a huge drop there. Okay, and just take into this account, okay, when we look at other charts and other sort of, let's say, online retailers, all right, in later on in this particular discussion. But you can see, after having the collapse, and you've seen, if you look at the indexes, if you look at other sectors, where we saw, we actually had some of them, moved like here. What we can see is actually for ABF, it actually not a great deal, and it's almost as if every time that the another lockdown was announced or the numbers got worse, well, then invariably the price basically sold off here. What you can see here, and this is what we're going to see, is a bit of a recurring theme here. Hopefully you can see there that that we had a big shift candle. Some people might call it a shift candle, an impulse candle, big bullish candle. When did that happen, and why did that happen? Well, what we saw there is that would be around about November the 9th, which is when the first of the COVID vaccines were announced. Okay, think about that. First, the COVID vaccines announced, and what we saw was a huge bump in bricks and mortars retailers, okay, in airlines, okay, in companies that had effectively shuttered during lockdown. Suddenly, okay, the vaccine gives them hope as a business, and that's what we saw. Now, of course, we've had more lockdowns since then, and if I look at that now, if I look at ABF now, I look at ABF there as that's just in a little bit of a block there. Would you hopefully see that? And that's been in a block for since December of last year. Okay, we're coming into like kind of 3 months of it. This is a daily chart, and actually that's just bouncing around there between around about 21 and 24. Okay, and I'd be kind of keeping an eye on that, because invariably what will happen is, when we do have a lifting of lockdown, that will probably give the likes of ABF Primark a bit of a bounce, because they can open up their shops and they can actually start to to sort of get some revenues through their tills. So at the moment, okay, I'd be watching that, but as the lockdown occurs, that's what we'll see is effectively is a lifting of that, and I think that might actually be a bonus for ABF going forward. They're in a little consolidation period at the moment, but actually a complete lifting of lockdown, vaccinate, especially certainly in the UK, where I think at this weekend we just passed 15 million people being vaccinated, is that actually that might actually be sort of like a help to ABF going forward. So it might be worth one adding to your own particular list. So what we've seen is as I said, this last year, okay, with COVID, all it's done is it's accelerated that shift to online shopping. Okay, it's been in full flow, and I do a Monday lunchtime market update, and pretty much most weeks have included elements of kind of some of the online retailers, because some of them have just been absolutely stellar. So the question then becomes for traders, well, how do you take part? Okay, how do you get engaged with this? Is this something that I want to be engaged with? And this is a question for yourself. Are you looking to be an investor, whereby you might just buy shares or get some exposure to either the sector, all right, or the stock? Or are you looking to be an active trader? Are you actually looking to actively trade, maybe on an intraday basis, maybe on a daily or a weekly basis? These are the questions you need to sort of just consider for yourself. And also what you have to look at is, are you thinking about, the sector in general or individual stocks? Okay, where do you feel that actually suits you better? I appreciate for some people, chatting to one of my own clients yesterday, who's done very well by literally buying the shares in the companies he thought would do well through pandemic, and he literally has taken that and just put them in a drawer and forgotten about them, and he's done very, very well, and that's actually helped him. Other people have the time and the interest and the inclination to want to actively manage and to actively engage with in individual stocks. And certainly, I'm sure if you've looked at both the indices and the individual stocks and some sectors, that has been a truly sort of a fascinating final 12 months in terms of the kind of the level of opportunity that has provided to us. So, this is a chart that I like to show, okay, and this, because it's an astounding chart. This is an ETF, an exchange traded fund. If you're not too sure about what an ETF is, you'll find there's lots of information and detail on the Admiral Markets website. If you also go on to the Admiral Markets YouTube channel, what you will find is that there's actually quite a lot of sections in there on the Trading Spotlight webinar archive, where you'll see my colleague Jens has done one or two videos on ETFs, exchange traded funds, how they operate, how they work, and how you can engage with them. But this is an ETF called iBuy, all right? And this is from a company called Amplify. And what this is this is an exchange traded fund that focuses solely on online retailers. Okay, this is focusing solely on companies that basically trade online. And just look at that chart. That's a weekly chart as well. Okay, it's I always say to you when I've, as long as I've been doing these webinars presentations, I always say a good trend should leap off the chart at you. And clearly you can see that has just been quite stunning. And so if you are looking for a way to just invest in a sector, well, this was one that was an opportunity to just buy the sector through an exchange traded fund. And you can see that we had kind of the pre-COVID crash highs there back in early 2020. Everything fell down a little bit, but once lockdown started to kick in, and we started to see that kind of shift in behaviors, in that everybody started buying stuff online. Okay, and invariably what you can see is that has just had a huge impact, right? From being down here at where we were, down towards kind of, I think it was about $33-$35, we're up now trading at like at 140. Okay, so from about 33 up to 140, okay, in the 12 months. And hopefully you can see that, and hopefully that gives you a huge indication of what's happened, what's occurred. Okay, I was chatting to my clients around about it, kind of wanted to go around about 50. I wanted to see it get up above hold about 50, and then that was a great buying opportunity, okay, for a longer term. But I don't think any of us really were expecting it to have just put in such an astounding performance. All right, so as I said, iBuy is something that I own. It's something that I watch, and it's something I actively track, mainly because it is a fantastic insight into the overall online shopping, online retail sectors. Okay, so that's something that you can watch and you can follow. And actually, that, as I said, that trend has just been astounding, okay, over the last year, right? Absolutely astounding. And that's why, I would be suggesting that, you add this to your watch list, because this gives you just a fantastic indication of the overall online retail sector. And what you can actually do is, if you look, you can actually look at, the companies that make up this ETF, and it's pretty much all those kind of stalwarts, to those names that we're going to talk about in a little bit later about how you can do it. The likes of, Amazon, eBay, etc. All these companies who specifically have focused on online retailing, and I said, that a picture paints 1,000 words. That chart is giving you a huge idea of the strength of that sector, and the direction of that sector and where it's going, and that is continuing to go. Even though, what we saw here, remember what I was talking about in November, okay, where I kind of the bricks and mortar, we looked at ABF, okay, when they had the announcement of the vaccine, and that actually bumped up bricks and mortar retailers and airlines, etc. And yes, it had a little bit of a bump here for the online retailers, but you can see that pretty much turned around, within a week, all right, and has continued to power its way up. Okay, that is telling you all you need to know at the moment about this particular sector. So, in terms of investing in the sector, maybe, you, as I said, maybe you want to be like my friend who just basically wants to just take a little investment, stick it away and put it away and forget about it. Okay. And that's absolutely possible. One of the ways you can do that is that, there is another ETF that you can actually follow, which is XRT, the Spiders S&P Retail ETF. So it has companies like GameStop, all right, which has been very prevalent in the news over the last few weeks, but also it is a mixture. Okay, it is a retail ETF, but it doesn't make a particular difference between whether it's bricks and mortars or whether it's online. They're just looking to basically within their bundle, a wide range of good retail companies. So places like Gap, places like Urban Outfitters, it's very easy to find out how to do that. How can you access that through Admiral Markets? Well, yes, you're able to trade that. Okay, you're able to trade that on a ETF CFD, and that is on their MT5 platform. Okay, and that's the Trade MT5 offering. Okay, and you can see that is on the Admiral Markets website. I've just taken a little snapshot from it there, but if you look on the Admiral Markets website, wherever you might be, whether you're in the UK, Europe, or globally, you'll be able to see the types of trading accounts that Admiral Markets offer. And if you're particularly interested in sort of trading in that, well, then invariably, what you can do that on the trade.mt.5 type of trading account, and you can actually play that through there. And we might have a little look at that later if there is time. But XRT, as I said, is a overall retail ETF. Okay, so you're getting exposure to the entire retail sector, with also that which does include some of the online retailers as well as some physical retailers. And if we look at it, here's a chart of XRT. Okay, and once again, this is a kind of it's a weekly chart that we've got here, and this is what's interesting to me, is that it's similar to the iBuy ETF, perhaps not as been as stunning as iBuy, but that's because there's effectively been a case of this is the whole retail sector, not just online retail. So invariably, but the majority of the retailers that are actually make up this particular ETF are retailers who already have an existing online presence. Okay, so they're not like the Primark that we looked at back, who have absolutely no online presence. Most of these already have an online presence, and what they've effectively been doing is effectively just developing that over the last 12 months. And as you can see from the charts yourself, here we go, the drawing tool is a case of you can see what was going on. We had that's the standard kind of COVID crash that we saw, followed by actually people spending stimulus checks, people spending furlough money, people being bored at home, and buying online. Okay, and once again, interestingly, there's that little November bump, okay, that we saw with iBuy and others, but it wasn't as pronounced here, and actually prices continued. Now, what you're looking at is probably saying, well, Paul, that's quite some astounding move there over the last couple of weeks. That's absolutely right. If you understand or can guess why that is, well, then you get Paul's gold star, for best student for the week. But of course, you probably recognise that's driven by GameStop. Okay, GameStop is actually a physical retailer, okay, bricks and mortars retailer. Okay, they do have an online presence, but they also have the shops there. Many of you will be aware of what's occurred with the GameStop over the last month. If you're not, well, then join me in about a couple of weeks' time, where I'll be doing one of these hot topics, primarily just on what actually happened with GameStop and the kind of the whole scenario. Then I'll talk about that in particular. But you can see, well, what's happened there is that filtered through into XRT as well, and it actually had a bit of a wild bump there itself, which it's drifted back there. But there is still that kind of trend there. Okay, there is still that effectively sort of upwards trend. And once again, as I said, this XRT has a mixture of online shops, but also general bricks and mortars retailers, which will actually get a bounce when, as I said, as lockdowns are lifted, as the kind of vaccine rollout sort of increases across the particular globe. So, as I said, that's something that you can trade as a ETF CFD, okay, through the Admiral Markets trade.mt5, but you can also watch that as I said, XRT as a general retail profilers, or general retail ETF. My apologies. So, those are kind of a couple of ETFs of the sectors that you could look at if, whether you wanted to trade them or actually whether you wanted to just invest in them. If you want to kind of trade in individual retail stocks, that kind of online shopping stocks in terms of still viable plays, what you'll find is, when people think of online retailers, of course, the gorilla, all right, the big silverback gorilla is, of course, Amazon, all right. I'm sure most of you will have not, you will know of Amazon. Many of you might find your house is full of stuff that you have bought through Amazon. Okay, many of you might even have Amazon other products. Okay, so it's a huge global company. But what also Admiral, and you can trade that. Okay, you can trade Amazon on Admiral Markets, both on their MT5 platform and also on their MT4 platform. On the MT4 platform, it also offers Home Depot and Walmart, which are they are retailers with online presences rather than specific online stores. But the majority of them, okay, if you wanted to sort of trade more in depth and actually have a greater reach, then you're going to actually have to go towards the trade.mt5 platform. I appreciate that a huge amount of traders here will be using MT4 because it's ubiquitous, okay, and it has been used around for many years. Like myself, there's lots of excellent sort of additional experts, advisors, and indicators and such that can be utilized. However, if you particularly wish to sort of focus on kind of online shops, okay, sectors, etc., then we're going to be gradually looking to sort of, this might be the thing that gives you the oomph to sort of start to migrate yourself away towards the MT5 platform. Okay, and there's both the trade.mt5 platform and also the invest.mt5 platform. Okay, so whether you want to be like an active trader or whether you just particularly wish to maybe invest in them. And so once again, I think if you go to the Trading Spotlight webinar archive, what you'll find is once again is that I think Jens has done a couple of videos on the sort of the kind of the A on MT5 and also on the differences between the trade.mt5 and the invest.mt5 platform as well. So by all means, go and check them out, okay, and you'll find them really helpful and useful to you. But as I said, you can trade Amazon and you could also trade Home Depot and Walmart as well if you particularly wish to sort of focus on one particular sector. And this is a chart of Amazon here. Okay, this is a chart as we can say here. This is the weekly chart, and hopefully you can see there. This is let's just draw on here. Okay, Amazon was effectively Amazon's been going for 20 years. Okay, it was back from when it was just effectively when it was just like an online bookstore. Okay, 20 years ago, has, of course, as you will well know, I don't need to really tell you, has just effectively exploded in terms of its size and its reach, okay, into all areas of retail. And what we saw was, we had a kind of a bit of a big sell-off there. Okay, 2018, 2019. Yeah, we came back and touched the highs, but for the second half, it weren't really doing anything too exciting. Popped to new highs, okay, at the start of 2020. We had the kind of the crash there, which finished with that's a weekly bullish engulfing candle. Wouldn't be my particularly favorite one. There's a little bit too much of a wick, but in terms of the range of it, it did. And what we can see is that price has actually just rallied up, okay. And invariably, as I said, this is the gorilla in the room, okay. This is what people have been watching, people have been using, people have been trading and buying through. And what we see here, and this is me. Amazon, I particularly like to look on the weekly chart. I sometimes find the daily chart can be a little bit, personally for me, it can be a little bit volatile, a little bit skittish. But I find that the weekly chart, okay, is very good for both trading and investing on Amazon. And personally, at the moment, what I've seen there is, hopefully you can see that yourself, is Amazon has been coiling up here. Okay, that's what I'll be looking at. Okay, is that invariably, for the most part, okay, the highs have been lower and the lows have been higher. The price has been coiling up over the last 6 months, and we're getting to a point where it's going to make a decision on what will happen with it. Personally, I look at this in the sense, normally I have a particular bias. If you are a classical technical analyst, you'll be looking at this as, this is a symmetrical triangle, which is a continuation pattern, which you would be expecting effectively to basically price to continue upwards. That would be a typical continuation pattern. But equally, what I can also see is a case of, is there a case of, as the vaccine rollout, increases, as lockdowns are lifted, are people just going to go back? People having been cooped up for a year, are people going to shun Amazon a little bit just because they actually because actually going to a shop to buy a top, to buy a piece of IT, to buy presents, etc. Is it just going to be because the novelty, people are just going to want to get out and actually sell? And would that actually have an impact on Amazon's earnings? And so could it actually roll over a little bit? My view is that 3,000 is kind of a good level there. Okay, it's a big round psychological number. And what I'll be doing is I'll be watching to see, if Amazon stays and holds above 3,000, I think that is long-term bullish. But, if there's some profit taking from people who are savvy buyers, okay, right at the start, okay, who want to now take their profits, well, that in itself could invariably, as I say, drop price down beneath 3,000. So, for me, watch Amazon at the moment, okay, on that, certainly on that weekly chart, just keep an eye on it, put it on your watch list for the moment, see how it plays out. Does it actually stay above 3,000? I think that, as I said, I think that is a kind of a key level at the moment for me on Amazon, and I'd be watching that to see how it reacts to that. Okay, and how it reacts to that is what can give us some really good insight into the sort of the next possible move, not only for Amazon but actually just generally for online retailers, because Amazon is as I say, it's the big silverback gorilla. Okay. As I said, we here, through Admiral Markets, you can also trade Home Depot. As I said, they would be considered a kind of a bricks and mortar retailer, but they do have an online presence. Home Depot, here in the UK, that would be kind of same as kind of like B&Q. They're kind of where you go if you want to spend your weekend doing DIY. Home Depot, like B&Q, is where you go to get your stuff. All right, if you basically want to paint your walls or redo your garden, this is where you'd be going to. And interestingly, once again, this is the kind of the weekly chart here, okay, of Home Depot. And what we're looking at is, let's just bring up the old tool. Is that, you can all see the kind of COVID crash that we saw there. Okay, we had a bit of a strong comeback. Once we got back up to those recent highs, okay, I thought we might actually drift our way down. We had a sort of big weekly bearish key reversal at previous highs. That's kind of always of interest to me. But you can see for yourself what actually happened is that price pushed its way up, all right, and price pushed its way up over to like $290, where it double topped, and once again, it's a little bit like Amazon, it's kind of it's consolidating, okay, it's squeezing, it's trying to work. We've had a bit of a double top there, okay, but clearly there's also, hopefully, maybe you can see a neckline there around just above 260, okay, which has basically acted as a kind of a level of support. And yes, we've had a bounce, but then we had another bearish key reversal here. Okay, so once again, I'm just watching to see what's happening. I think this is a kind of an interesting point. All right, it's an interesting point. If that neckline breaks, well, then I can see us getting taking down towards around about 250 at least. Okay, I can see us drifting our way down towards there. The profit takers. Alternatively, do we come into spring? Okay, do we want to see people want to get out? People have got the lockdowns lifted. That means they're going to be buying stuff from Home Depot, whether they want to go to it or whether they want to buy it online. That actually will effectively just give it the opportunity to push it up. So I think this is going to be an interesting stock over the next few weeks. Okay, if I remember from about May time of last year, when in fact Kingfisher, who the company who owned B&Q in the UK, they actually got the opportunity to reopen, to allow people to buy stuff to do up their homes, and invariably, it was a huge big boom for the revenue for Kingfisher and B&Q, because invariably it was spring, people want to do stuff working out anyway, but you've been cooped up. Everybody's been sat in their home for a month, or for a year, looking at, sort of sitting there, sort of, what they think about their own homes. All right, and now is the chance to get out and do it. So, as I said, it's at an inflection point at the moment. It's an interesting decision point. So, keep an eye on that, okay, in terms of where it might actually take us. And then, as I said, kind of one of the other. I mean, it in itself is a big gorilla of a sort. Walmart, okay, it's a huge, big supermarket. Okay, once again, they also have an online offering, but I wouldn't particularly call them an online shopping stock, specifically. But they have access to online presence, and that is what has happened. Furthermore, supermarkets have been wanted. In fact, they've been opened. And so you can see, actually during there wasn't as much of a COVID crash as other instruments, because supermarkets were allowed to be open. People still want food, don't they? People, you might remember, for wherever you were, there was kind of real kind of runs towards basically companies everybody wanted to buy toilet roll. Okay, so that made for huge demand. But you can see for yourself, it's not been as pretty as some of the other stocks, but it has continued to drag its way north. What I see here, though, is this was effectively a bit of a double top here on the weekly chart, and it was also with a weekly key reversal. And what we've seen is prices kind of rolled over. Remember, we're saying people are taking stocks profits from their stock plays. Now you're looking at, okay, is this I'd be looking at this, is this a flag, a bullish flag? A little bit like what we had earlier on in the year. They're not terribly pretty on Walmart, but you don't always get a pretty setup. Or is it a case of could this be kind of a push up to 150 before it rolls over? Okay, before it rolls over back down to the kind of this roundabout kind of just above 130 area. So once again, and what looking at that is it has been bullish, but I'd be a bit wary of Walmart at the moment. I think that I'd be just watching to see how does the price play out over the next couple of weeks. It needs to break those highs and continue making new highs, consider it to be a long term. Or is it just push up and then make a last point before it particularly rolls over? So I'd be watching. I said watch around about that 150 area. Okay, see if it rallies up there, and then equally, if it rolls over, you're looking down to about 134, then down to about a kind of 134, then down to about 130, then down to about 122. That's what I'd be looking at in that particular area. So, as we kind of look to draw to a close, this is just a little bit of a follow example, and this is kind of more about giving you insight into what we think will happen, okay, in terms of what's going on in the near future. And this is an example from quite recently, I think, from about a month or so ago in the UK. What we actually saw was we saw some interesting kind of M&A, merger and acquisition activities from major companies in the UK. And what we saw was we have two online retailers here, Boohoo and ASOS, and they bought parts of bricks and mortar retailers, Debenhams and Topshop, who once again, a bit like Primark, big names on the high street, big stores on the high street. But here's the interesting thing, okay? The online retailers, Boohoo and ASOS, that they only bought the brand and the stock. Okay, they did not buy the shops. All right, they didn't buy the shops. They didn't buy the physical locations. They only bought the brand and the stock. Okay, and I think that's it's fascinating insight into just confirming the strength of online retailers. Okay, they are still viable. Okay, and actually what they're doing is they're using this as an opportunity to very cherry pick. All right, cherry pick from the carcasses of some of these, let's say, old school bricks and mortar retailers, and I thought that was a fascinating insight into the kind of what's going on, and I have no doubt that wherever you are in the world, if you look in the newspapers, you would probably find local examples of this going on as well. And if you do them, just put them in the comment box or the chat box. It makes a bit fascinating. And and this just very quickly to finish up. This is a monthly chart of ASOS as seen on screen. Okay, I put a monthly chart up here because this from my own personal experience here. You can see here that they kind of from dropping down to 12. They're back up there about 55. Okay, so. And you can see that it's been quite a move. Okay, it's not been it's not been a straight line in any way, shape, or form. Okay, and the reason I put this on this monthly chart is because I traded in these shares many years ago. So far back ago here, it would have been a bit about 2004. It would have been where I bought ASOS shares for 25 pence. Okay, they were 25p. And then I sold out of them, I think about a year or so later, okay, when they reached £1, okay? They reached £1. And I thought I was a fantastic trader because I bought at 25p. I think I bought about £2,000 worth of shares at 25p and then sold out of them about just over a year later at £1. And I had a 4-to-1 reward to risk ratio, and I thought I was fantastic. But invariably, okay, it's always, in hindsight, you can always see that invariably we can see ASOS, went on to, up to like £70 a share there. Okay, it's that's trading, ladies and gentlemen. All right, there's no perfection to it. You've heard me say it before. Okay, but you can see what they're doing at the moment. They're using their strength at the moment to basically strengthen their own position, which kind of just makes them, as I say, viable plays for the future in the way that we're always going to look into retailing. And Boohoo as well. You can see this is Boohoo. This is, as I said, it's a bit like the ASOS. The share prices. It hasn't been all plain sailing. It hasn't been. It's not one straight line. Price really has moved as a zig and a zag there. But you can see that actually, price is it's strengthening. Okay, there is strengthening, and if Boohoo feels strong enough to be buying, elements of existing large retailers, well, that tells us an awful lot about the strength of online shopping stocks. Okay, excuse me, and whether they're viable plays, and they most certainly are. So in conclusion, ladies and gentlemen, the COVID pandemic of 2021 accelerated an already major trend, right? Moved from bricks and mortar retailers towards online retailers. And while some, bricks and mortar retailers have survived, some of them have even thrived, we can see that clearly the momentum is with online retailers, okay? And this is likely to continue, all right? This is likely to continue. This is why, that it's still they are still viable plays for us. If you want to trade a retail sector ETF, X or T, well, you can do, as I said, Admiral Markets on the MT5, trade.MT5, where you can trade the CFD of the ETF. And on Admiral Markets MT4, you can also trade individual stocks, Amazon, and also Home Depot and Walmart as well. So for those of you who want additional support, you can come and join us in the exclusive Trading Spotlight community, where myself and my colleagues Marcus and Jens, are posting there. My colleagues Marcus and Jens put up some excellent stuff every day. I'm going to be there for the rest of the day today if you want to come in and ask questions of it, and you can join us there on tradersyard.com/group/312. I look forward to seeing some of you there. And don't forget to join us next time, where it's on Friday, where my colleague Jens, is going to talk about too big, too small, how to size your trades the right way, including quick glance at the 3 columns of profitable trading, what aspects of the right position size are important, and what is the Kelly formula and how you can use it. And that will be on Friday, 19th of February, 2:00 London time. Check your inbox for the webinar link. So I hope you found that useful. I hope you found that interesting. It's giving you a little bit of insight and background to actually what's been going on with bricks and mortars retailers and also online retailers, online shopping stocks. And as always, if you have any particular questions, well, you can always get in touch with us. You can email us at global@admiralmarkets.com. You can watch this and all the rest of the Trading Spotlight webinar archive on youtube.com/admiralmarkets and also on facebook.com/admiralmarketsglobal. I hope you found that useful, ladies and gentlemen. As always, I wish you the best of success in your own trading, and I look forward to speaking to you soon. Many thanks.